purchase options, how to buy your textbook. I negotiate with the publisher. So if you want to buy a textbook, you will have a discount code, and you will have 10% discount. You can either buy a hard copy or a soft copy. My recommendation or suggestion, you probably want to buy the ebook because it's much cheaper, right? As you can see the price. Now, students used to ask me, hey, Robert, do I need a textbook? This is entirely up to you. All right, don't ask me, I don't know. This is entirely up to you. If you believe that you are super smart, you don't need a textbook, fine, that's okay. But I can't make this decision for you. Does this make sense for you? So if you want to buy the textbook, that's your textbook purchase option. And my suggestion, go for the ebook. After the discount code, it's probably about $60 something. Any questions up to this stage? Good. Now let me move to the next bit. And then, of course, more information about the book. Finally, rights and responsibilities as a student, a document that you should read by yourself. Okay? As a student, what's your rights and responsibility? I strongly recommend you read this part to understand your rights and your responsibilities. So the first bit, unit information, unit guide. And then, if you open at the student view, I'm not able to do it in student view. Anyway, you should be able to say learning resources. If you click learning resources, you should be able to say week 1, to week 12. All right? I haven't opened week 3 to week 12 yet. Now you should be able to see week 1 and week 2 folder. If you click week 1 folder, for example, here is the week 1 lecture slides. Get it? And there's another document. I will go through this with you shortly. Every week, I will put the weekly study learning information under the weekly folder. For example, this lecture will be recorded, right? The recording video after this lecture will be posted on the week 1 folder. For example, I might prepare a summary video for you to summarize the key learning concepts. I will put the summary video under this folder as well. For example, there might be practical questions. The questions will be posted on the weekly folder as well. There's no tutorial question for week 1, but start from week 2, we do have seminar questions. If you click week 2 folder, in addition to week 2 slides, week 2 workshop problems. All right? So that's how it's structured. Up to this stage, any questions? Good. Now let's move to the next part or next category. Assessment. That's supposed to be the last category that you should have seen in your Cloud Deacon. All right? I do have other functions as instructor, but that's everything that you will see in your Cloud Deacon. Assignment 1, Assignment 2, exam resources. As you can see, Assignment 2 and exam, up to this stage, I put it on the draft mode, so you can't see it. You will only able to see Assignment 1 information, right? About your Assignment 1, listen carefully. Please click the Assignment 1 button, and there is your Assignment 1 documents, Assignment 1 instructions, and what is your Assignment 1. I will go through this with you in this lecture, but please make sure that you read these documents again. And please make sure if you forgot about how to do it, watch my echo recording video. Up to this, any questions? Good. Now, what is your Assignment 1? Your Assignment 1 is a weekly Applia practice. Applia is provided by your textbook provider, but luckily, I negotiate with the textbook provider. Even that you don't buy the textbook, you're still able to access to Applia. So it is entirely free for you guys, okay? Second, Applia is like an exercise practice. Okay, it is like your homework. All you need to do is to complete this homework, and you will have 10 out of 10 as your assessment marks. How to do it, and how to do or sign up. If you go through or open the first one, Assignment 1, Applia instructions. Assignment 1 is an ongoing assessment based on your performance online. It consists 10 online assignments on your Applia website, which are accessible through the assignment tab link on LinkedIn, and I will show you how to do it. Once you sign up into Applia, you should have this page, and every week you are then able to do the Applia homework. I will show you how to do the sign up and the registration process shortly, but just for this assessment, please note that for this Applia homework, you are only required to complete 8 out of 10, which means the best 8 out of 10 assessment will be counted for your assignment 1 marks. Because I do fully consider your difficulties during the trimester, you may not able to do all of these 10 assessments because it is a weekly homework. So you only need to complete 8 out of 10, and the best 8 out of 10 will be counted for your assessment 1. Of course, I encourage you guys to do all of them, all right? For each of the Applia assessment, you have 2 weeks time, 2 weeks to complete it. That's why, please don't come back to me and ask for extension. There will be no extension for Applia because I scheduled Applia due date for all of the students. I can't change the due date. Does this make sense for you? You have 2 weeks time, plus you only need to do 8 out of 10. Even you have any personal difficulties during the trimester, highly likely you should be able to do them, all right? If you still are unable to complete them, please let me know, and I will figure out another approach for you. But there will be no extension for Applia. All right. How to do Applia and how to sign up. On the assignment 1 folder, there is a second document, right? If you click it, and that's how to access to your Applia 1, or Applia. Let me enlarge it a little bit, yeah. Basically, all you need to do is very simple. You click the link that I put here, or you copy and paste. See, like, show you. See? Let me download it. All right, let me click it. Once you click the link, it will pop out a window. Now, all you need to do, if you are a new student means this is the first time that you are doing this unit. If you use Applia before your other unit, doesn't matter. As long as you are a new student for this unit. Can you see that new student part? Use your Deacon email address to sign up the Applia. Okay? Please make sure that you are using your Deacon email address. So all you need to do, type your Deacon email address and click next. That's all you need to do. And then you will have a username and password. If you are a returning student, which means unfortunately you failed this unit in previous trimesters, please go through the next one, returning students. This bit here, all right? If you have any information, please send your information to the Applia or Cengage support, which is in the previous document as well. They will help you to solve the issue. Does this make sense for you? Now, please make sure that you sign up the Applia by using your Deacon email address. This is very important. Why? Because at the end of the trimester, I need to extract your marks from the Applia database. I extract your marks from the Applia database based on your Deacon email address. If I recognize the email address ended up with Gmail, or Hotmail, or Yahoo, or whatever, I will simply ignore it. Because I can't identify that student. Am I right? And that's how it works. The only identification that I have from you guys is your Deacon email address. That's how I link you, your profile, with your Applia marks. Okay? Now, once you sign up Applia, you create an account, then you should be able to do what I'm doing right now. So you go to Applia, you click sign in with Applia. Now I will sign in with my Deacon email address and my password. Now I now sign in the API with my Deacon email address and my password. Of course, this is the instructor view. Your view will be different from mine. All right, as you can see, I'm the instructor for many different units. So your unit is supposed to be MPF 753 T2218. Now, once you click All Assessment, that should how it looks like. At the very beginning, this is for week 1. It's for practice purpose only. It will not be counted, just for you to familiarize yourself with the system. Get it? Now, your first API homework started from next week, week 2. For each of the API homework, you have 2 weeks window to finish your API homework. Am I right? Which means your first API homework due date should be on week 4. Then please note that your API homework on this system is scheduled based on the due date. Because your first homework due date, week 4, here it is. Can you see that? And that is your first API homework, topic 2, due date on week 4, Monday, 11:45 p.m. Now how to do your API homework and why it is homework and why it is so easy. I will show you. Once you click into the API homework, different topics and different questions. Let's randomly pick up one question. Simple interest versus compounding interest. And then, based on what you've learned from the unit, you're then able to start to do the question, right? Now here is the good news for you. Because the API is designed as a practice purpose. For every question, each of the API questions, you have 3 times to do the question. Which means you can try it once. If you get it wrong, doesn't matter, try it again. If you get it wrong, doesn't matter, try it again. You have 3 opportunities. All right? Of course, if you get it wrong for all 3 times, you lose the mark. But I think it's highly unlikely. All right? As long as you just don't randomly guess the answer. So how it works? All you need to do is to click, and then you go to the next part. And once you finish all of your API question, there's supposed to be a button at the bottom called Grade It Now. You click it, you can see whether you're right or wrong. If you're wrong, that's okay, do it again. You can do it. Any questions up to this? Once you get it all correct, then submit your API homework. There's supposed to be a big blue button on the top right corner called Submit Your Homework. You just submit it. And that's basically everything for your homework. Up to this stage, any questions? You can do it in a group. If you want to form a study group and you want to do it in a group, that's entirely okay. As I said, this is like a homework. Homework means if you don't know how to do the question and you ask your friend to teach you how to do the question, this is okay. Okay? I designed this API homework system to help you to understand the concept of finance. Up to this stage, any questions? All right. Let's go back to your API documents. Now we should have a clear understanding about, where is it? Assignment 1. Yeah, this one here. After all this explanation, Now we should have a better understanding about the assignment 1. And again, please go through this document again. What I'll go through and what I've talked about all covered in this document. For each assignment, you will have up to 3 attempts until the due date. Every attempt will have a slightly different set of numbers. It won't be entirely the same, but the type of question will be the same, okay? And the attempt with the highest score will be used for grading. Now, click Grade It Now immediately after answering each question, as I show you at the bottom, right? And then you should be able to see whether your answer is correct or not. If your answer is correct, then click Continue. You go to the next question. If not, you can always click Try another version. You can try up to 3 times. Finally, when you want to submit your APPLY homework for that week, there is a big blue button called I'm done, grade assignment now, on the top right corner normally. So big blue button, and that's how you submit your APPLY homework for that week. Up to this stage, any questions? And that's basically everything about your APPLY homework. It will be started from week 2, last for 10 weeks till week 11. Best 8 out of 10 will be counted. Any questions? Good. That's basically everything about your APPLY. Now, let's move back to your Cloud Deacon. I haven't finished it yet. We went through everything under the resources folder, right? The next one is discussions. Please note that in this unit, I will only answer study-related questions or learning-related questions on this Cloud Deacon discussion board, not email. I will only reply your email regarding to personal matters. Personal matters means extension, difficulties, hardships, like this. But if you have any questions about the content of this unit, please ask your question on assignment discussion folder, because I want you to share your question with other students. And most likely, you may realize the questions that are asked by other students might be your question as well. Okay? So I can answer all questions in one go. Now, if you look at this assignment discussion folder, it's designed in this way. The first part is unit discussion and calculator policies. If you have anything about this unit, questions about this unit, issues, complaints, anything, just put it on unit discussion. Everything is transparent. All right? I'll try my best to solve your question as soon as possible. Please note that if you have anything about privacy or personal matters, send me the email. Don't post it there. Get it? Okay. Second, topic discussions. As you can see, there are 11 topic discussions, right? If you have questions about week 1, post it on the week 1 folder. If you have questions about week 2, post it on the week 2 folder. Does this make sense for you? Once a student posts a question, I will not answer your question within 24 hours. I will not. I will leave it for 24 hours. See whether other students are going to help you to answer the questions. I want to encourage for interactions between students. But if I do realize that this question is regarding to an emergency matter, I will answer your question as soon as possible. Does this make sense for you? For example, a student may ask the question, Robert, what is present value? What is future value? What's the difference between present value and future value? The answer is in your week 2 lecture slides. I will leave it there. I will leave it for student participations. And you may be able to solve the questions by yourself. I will leave it for probably 24 hours, and then I will come back to your question. Does this make sense for you? Now, that's about your topics. The next part is your assignment folder. Assignment folder is about your assignment 1, assignment 2, funding group partner, and final assessment. Assignment 1, if you have any questions about your APPLY, I will answer your questions within 24 hours. Because apparently, if you have questions about Applia, most likely other students can't help you, and I will help you, okay? If you have any questions about assignment 2, I will answer your questions as well. Does this make sense for you? And finally, assignment 2, it is a group assignment. Group assignment in a group of 2. If you're looking for a group partner, you may want to post your information on finding group partner section and looking for a group partner for assignment 2. Get it? Now, for assignment 2, I fully understand it is a group assignment. But if you want to do it individually, please let me know. If you have any reason that you wish to do it individually and you believe this is the best interest for you, you can do it individually. But just make sure that you send me an email and explain to me the reason. Get it? For example, I do have a student study overseas in different time zone. It is really hard for this student to do this assignment with other students. For his best interest, he decided to do it individually. That's okay. All right? Now, up to this stage, I've explained everything about Cloud Deacon and what you need to know up to this stage. In week 4, week 5, and week 6, I'll explain to you how to use assessment folder and how to submit your assignment, but not this stage. Up to this stage, any questions? Any questions? Good. I hope I explained most of the stuff about this unit at the very beginning. Before we formally start, one last bit of information. For students that enrolled in Master of Professional Accounting, Master of Professional Accounting and Finance, Master of Accounting and Law students, now, here is the event for you. On Friday, 27th of July, career path event. All right, I believe they will have people from Big 4 accounting firms and from industries to give you a talk about career path, about accounting things. All right, if you do have time, please attend this event. But this is just for accounting students. If you are enrolled in accounting major, you attend this event. Because our unit is a co-unit for accounting unit as well, okay, for accounting major as well. All right. You have this flyer under your week 1 folder, so you don't need to take a photo for this flyer. Let me close all tabs and move back to our lecture slides. Okay. Finally, the scope of finance. Why finance? Before we start, just let you know, give you a brief introduction about myself formally. I did my PhD in finance at Monash University back to a few years ago, several years ago. And I've been teaching this unit for more than 10 years, all right? Like 20 trimesters or 30 trimesters. So if you do have any questions about finance, please feel welcome to ask me. Anything that you would like to discuss with me, you can talk to me, all right? The scope of proper finance. Before we start, let me ask you a question. You decide to do a master degree, right, for many different reasons. But why finance? What are you expecting from this unit? So like, while I was doing my undergrad degree or something, I have expectation about the unit. What is your expectation from this unit? What are you expecting from this unit after you complete this unit? There are something I can assure you. One, you won't make a lot of money. Okay? 2, you won't be able to deal with shares. 3, everything happening in the movies are wrong. Okay? What are you expecting from this unit? Anyone, you have expectation? Or you have no idea? About finance, my understanding, finance is a little bit different from the unit. It's not only help you with your professional life. In fact, it's going to help you with your personal life as well. For example, in finance, we will talk about capital budgeting. What is capital budgeting? Capital budgeting is all about how to make investment decision. In your life, you have to make an investment decision, right? You have to buy a property. You have to invest in education. Sometimes you need to invest into shares. Sometimes you need to invest into fund. But you have to make an investment decision. And that's how it benefits you from the learning this unit. Finance is about risk and return. Why high risk, high return? If you want high return, you have to bear or take high risk. No risk, no return. What is the risk and return relationship? And that's what are you expecting from this unit. Finance is about raising capital. Raising capital, if you want to make an investment decision, you need money. But you don't have money in your pocket. What should you do? In your professional life, you may raising capital from bank, from share market, right? In your personal life, you're raising capital from your parents, right? Or you borrow money from your parents. And that's raising capital. Now think about a practical example. Your parents pay you tuition fee. That is a capital investment decision. They invest in your education. What are they expecting? They are expecting you have a bright future, to generate income, be realistic, to be a useful person to the society, to contribute to the society. This is an investment decision. Am I right? From your perspective, to some extent, you borrow or raising capital from your parents' pockets. You invest into yourself. You invest into yourself. Now, your shareholder is your parents. Am I right? You are using your parents' money in investing in yourself. Am I right? You should take responsibility for them. Am I right? Just like practice. If you are the CEO of the company, you get money from shareholder, you invest their money, you have to be responsible for the shareholder. Am I right? And that's why you study hard, you work hard. And that's something you are expecting from finance. What is time value of money? Let me ask you a question. Today, if I borrow $10 from you, a year later, I'll give you $10 back. Are you happy? Why not? I get $10 from you, I give you $20 back. Why are you not happy? Huh? Exactly. Time value of money. $10 today worth more than $10 in a year's time. Do you agree? And that's how it works. And we need to differentiate this concept. You understand this concept. But the question is, how much money should I give you in 1 year's time? I know it won't be 10. Should I give you 11? Should I give you 12? How to make this kind of investment decision, and that you are expecting to learn from this unit. We need to consider the risk and other factors. And we will talk about share market. You won't be able to make money, but you probably can't understand the function of share. What is share? Why share pay you dividends? What's the risk of share? Today, if you work newspaper, all right, the share price of CBA is about $60. Question, why 60? Why not 6? Why the share price of Google or share price of Amazon is $1,000 per share? Why not $1? There must be a reason behind it. All those kind of things that are you expecting to learn from this unit. Now, after this lecture, after this seminar, ask yourself a question. What are you expecting from this unit? You need to have an expectation to meet your expectation. You pay tons of money for learning and studying this unit. You need a reasonable expectation. Okay? Learning outcomes for this unit. This week, I'll give you a brief introduction, a big picture about finance. At the very beginning, I'll tell you the corporate finance functions, and then legal forms of business organization, and then goal of financial manager. If you are the manager of the company, what should you do? And then agency problem. All right, so those are the learning outcomes, and we will went through this one by one. Before we move to the next slides, one more thing. This lecture is recorded, so please make sure that you attend this lecture on time every week. Okay? It is not a lecture in 8 p.m. or 8 a.m. in the morning. It's in 12 p.m. So please make sure that you attend the lecture on time. All right? Corporate finance in modern business. Generally speaking, what is finance? What is corporate finance? By taking actions that generate benefit in excess to cost, companies generate wealth for the investor. So finance is very easy. All you need to do is to ask yourself a question. Do this action, investment, create value for the company's shareholder? That's it. Think about your personal life. Easy. Now you are a student. As a student, does your action create value for your parents? That's it. Your parents is your shareholder, investor. You have to be responsible for your actions and make sure your actions create value, not only for you, but for them. Does this make sense for you? Now, next bit. Capital budgeting. As an example, I told you guys, capital budgeting all about investment decision. It is about selecting the best projects in which to invest the resources of the company based on each project perceived risk and return. It sounds easy, but it is really hard in practice. Let me ask you a question. Think about it. Today, I have two projects in front of me, Project A and Project B. Project A, I invest $10. It will give me $20 in 1 year's time. $20. Project B, I invest $10. It will give me $15 in 1 year's time. 1-5. Which one should I go for? A or B? How do you think? Really? Should I go for A? Or should I go for B? Without learning finance, you will go for A, right? But that might be a wrong decision. Why? Exactly. We do not put risk into our consideration. Am I right? What about Project A is actually a mining project? And Project B, you are actually investing to Woolworths or Cosmaya. Now, which one is better? You might have a second thought. Do you agree? When you're trying to evaluate your investment decision, you have to put this risk and return in consideration, not just return. In practice, I saw a lot of people, when you talk to them, you only present the return. They are just happy with the return, and they will blindly go for A. And most likely, it might be wrong. And you have to consider the risk and return components. Details will be discussed in week 7 and week 8. But generally speaking, in practice, first of all, you need to identify the potential investment. Identify potential investment. And then analyzing the set of investment opportunities and selecting those that create shareholders' value. You need to use different skill set, tools, method, approaches to analyzing these two projects. And then you select the one that creates the best value for the shareholder, or the one that meets the shareholders' expectation. For example, if the shareholders are a bunch of risk seekers, you go for A because they are looking for risk. If the shareholders, they are risk averse, you go for B because they don't want risk. And that's how it works. And finally, once you decide which project you're going to go for example, B, and then implementation. Implementing and managing the selected project. Up to this stage, any questions? Good. Risk and return will be covered in week 4 and week 5. Now, we did our analysis about A and about B. And we realized, okay, B is the one that creates value. And realize B is the best project for us up to this stage. Ooh. But I don't have money in my pocket. Yes? If I invest $10, B will give me $15, right? But I do not have $10 in my pocket. What should I do? Raising capital. Capital budgeting is about investment. Capital structure is about raising capital. Now, raising capital to support the company's operation and investment programs externally. You may be wondering, how should they raise capital and where? You could either raise capital from the equity market, share market, by issue shares, or you can borrow money from the bank, debt, or you can borrow money from your friend, private debt holder, or you can borrow money from the corporate private debt holder as well. That's about raising capital. For example, the firm, they can raise equity capital privately from professional investors, venture capital, angel investor, or they can go public. Once they go public, they will issue shares and launch shares, which is called initial public offering. In short, RPO. RPO will be formally discussed in week 4. In short, if the firm, it is your first time go public, the first time you issue shares, it is called initial public offering. The first time you offer to the public. Okay? Once you do initial public offering or you borrow money, now I finally have my $10 in my pocket. I make my investment decision, I will invest into this project. I make my investment decision. I borrow money. And then what should I do next? Managing, right? I have money, I invest into the project. In the next 5 years, I need to manage the internal cash flows. You invest into the project, you need to manage the project. It's like you buy a shop, you need to manage the shop in the next 10 years. Does this make sense for you? Managing a company's internal cash flow for day-to-day operations, and it mixes debt and equity financing. Now, your obligation is to maximize the value of the debt and equity claims of the company. What is it? If, for example, I have my $10 from debt holder and equity holder. Debt holder means I borrow $5. Equity holder means I issue $5 share. Now, I have to manage the project to make sure every year this project generates enough cash flow for me to make or meet debt holder's obligation, which is interest. I borrow money from bank. I have to pay interest. Am I right? I issue share to shareholder. I have to pay dividends. Am I right? I need to manage my internal cash flow. Make sure this project generates enough cash flow every year, and then I can give it to my bank, and then I can return it to my shareholder. Does this make sense for you? And that's how it works. I have to ensure the company can pay off its obligation when they come due. In practice, if the company cannot meet their obligation, we have very severe consequences. For example, if you are not able to meet your debt obligation, what happened? Bankruptcy. The bank will take over everything and declare for bankruptcy, and they will sell whatever you left in your company, assets, and take their money back. So you have to make sure you meet the obligation. If you cannot meet shareholders' obligation, share price decrease, right? And it is really hard for you to raise capital from the shareholders again. And that's how it works. Now, up to this stage, any questions? Okay. Once you meet the obligation, later on, you're then able to obtain seasonal financing. What is seasonal financing? So once you issue share to the general public, RPO, later on, if you need additional capitals, you want to issue share again. That is called seasonal financing. And this will be discussed further as well. Manage inventories, paying suppliers, and collecting from customer and investing surplus cash. If your company meet all the obligation, you then able to have extra money for further investment. If, for example, this project generates $5, and I only need to pay $2 to meet my debt holder and shareholder happy, I have $3 for further investment. Okay? And that's a cash flow investment. After this stage, I give you a brief picture about corporate financing. From investment to raising capital involves risk and return and managing the project. And that's basically everything you will learn from this unit. Of course, in details in the next 10 weeks. Starting from present value, time value of money, moves to bond, a debt item, moves to share, an equity item, moves to risk and return, move to capital budgeting, how to make investment decision, and move to capital structure, what is the best structure of the capital for the company, and finally, dividend policy. That's basically everything about this unit. Now, next slides. Let me check. After these slides, we have a break, okay? So next slide, corporate governance. We talked about investment decision. We talked about raising capital. We talked about risk and return. We then talked about internal cash flows managing. And finally, we can't forget about corporate governance. Corporate governance, how to govern the corporate. Corporate governance, developing company's ownership and corporate governance structures to ensure managers behave ethically and make decisions that benefit shareholder. I'll give you examples later on about what about if managers do not behave ethically and how and why. But before we move to the next topic, let me ask you a question. If you are the shareholder of the company, you are the one who actually invests into the company. Managers or CEO is your agent, represent you managing the company. Am I right? Of course, from the shareholder's perspective, if you are the shareholder, I'm your agent, CEO, you want me to act on behalf for you, for your best benefit, not for my best benefit. Am I right? If I am acting on behalf of myself, for my best benefit, not your best benefit, this is called agency problem. And we will talk about this later. In short, if the company do not have good corporate governance, generally speaking, they will generate agency problem. And agency problem will hurt the value of the company. And that's why we need good corporate governance. How? Generally speaking, the dimensions of corporate governance. We need board of directors. Board of directors to monitoring the manager's behavior. You can't just let the CEO himself to make or herself to make all the decisions. Every decision need to present to the board of directors. You need compensation package. Compensation package, for example, if I'm the CEO of the company, instead you just pay me money, you may offer me a compensation package. My salary package include not only money but also shares. To this end, I have the motivation to increase the share price. Am I right? Because my compensation package includes shares. To this end, me and shareholder, we are share the same boat. We are on the same boat. So I align my benefit to the shareholder. I have the motivation to increase the share price. Auditors. You need auditors to make sure that managers do not do stupid things. I'll give you examples later on. How and when and why manager will do stupid things. And then, finally, law. You need law to protect the company and to make sure that the company complies with all the requirements, or comply with all the requirements. The manager or management of the company that do not govern themselves well, generally speaking, you are subject to the risk of takeover. Okay? For example, in the market, sometimes you read the news, company A take over company B. In most of the case, the reason they take over company B because they realize company B have a great potential. The reason company B performed bad simply because of the bad management. Okay? So if you are the CEO of the company, if the company do not have a good corporate governance structure, it is highly likely that your company will become a takeover target. And that's basically everything about corporate governance. Now, let's have a 10-minute break. And after the break, we continue our lecture. So please come back at 1:05, okay? 5 past. Yes? Yes? I showed you at the beginning of the class. That's what I said. The textbook purchase option. If you click home button.
Yeah, I have seen all this.
Okay.
Is we can take it from the library or we need to purchase it?
Or if you want the discount code, you need to get it online, I think. I'll show you. See, that's why I'll show you textbook information, right? And that's how you buy a textbook. You can purchase your options. You can go to here.
By clicking on this,
Yeah.
we need to enter our student details so that we can get our 10% discount.
No, the discount code is here. Just type this discount code. So at checkout, you just type the discount code. It will ask you, so that's how. So you just see, for example, you want an ebook, you click it, and you hit front, and then click it again. All right? Yeah. No worries. All right, please settle down. We are about to start. All right. Before we have the break, we talked about corporate governance. Now let's move to a little bit detailed things about structure of the capital, legal form of the company, and then agency problem. This week's lecture, because we do not have seminar questions or workshop, so we'll probably finish slightly earlier. We'll probably finish in another hour, all right? Debt and equity, the two flavors of capital. What are they? So just give you a brief introduction about debt and equity. In week 3 and week 4, we will have a detailed discussion about debt and equity. What is debt capital? Debt capital, in short, very easy. Borrowed money. As long as this money is borrowed money, this is debt capital. If you borrow money from the bank, debt capital. You borrow money from a company, debt capital. Even you borrow money from your friend or from your parents, legally it is debt capital, okay? Now debt capital, the borrower is, or you as a borrower, have the obligation to pay interest. You have to pay interest at a specific annual rate on the full amount borrowed, as well as repay the principal amount at the due date. I'll give you an example. Today, if I borrow money from the bank, $100, at interest of 10% annually, maturity in 2 years, which means every year I have to pay $10 to the bank at the end of the year as interest. At the end of year 2, I have to pay $100 principal to the bank as well. This is my debt obligation. If I failed to meet my debt obligation, what happened? Then the bank is protected by law. The bank can sue me, and the bank can take over my asset and sell out my asset to get the money back. And that's called debt capital. If the company borrow money from the bank and the company cannot meet their debt obligation, bankruptcy, insolvency. Next one, equity capital. Equity capital is an ownership or an ownership interest, usually in the form of ordinary or preferred share. I'll explain to you the difference. Ordinary shareholders receive returns on their investment only after creditors and preference shareholders are paid in full. So what is it? Equity share. I issue share to the market. Generally speaking, there are 2 types of shareholders in the market. The first type, preferred shareholder. Preferred shareholder is very funny, okay? On one hand, preferred shareholder is not protected by law. On the other hand, preferred shareholder is very similar to debt holder. Predetermined amount of money at fixed rate. And finally, preferred shareholders do not have voting rights. Again, more examples will be discussed in week 4. Now, I want to focus a little bit more on the ordinary shareholder. In the share market, when we talk about share price of the share, when you open television, you watch any financial news or whatever things, when we talk about share price, we are talking about ordinary share price. Ordinary shareholder, they are the owner of the company. If you are the ordinary share or ordinary shareholder, you are the owner of the company. They have the voting rights. Okay? They are the one that select their CEO for the company. Ordinary shareholder will get paid only after debt holder, creditors, and preferred shareholder get paid. For example, today, if the company generates $10 after tax profit, this $10, first of all, you have to pay your debt holder, bank. If the bank interest is $10, you pay all $10 to the bank, and you have nothing left to preferred shareholder and ordinary shareholder. Does this make sense for you? Second, if today the company generates $11 profit, $10 to the bank, then you have $1 for your preferred shareholder and ordinary shareholder, you have to pay preferred shareholder first. If you pay $1 to the preferred shareholder, you have nothing left for the ordinary shareholder. Does this make sense for you? Third, if the company now have $12 profit, you pay again $10 to the bank, fixed amount of interest. Again, $1 to the preferred shareholder, fixed amount of preferred share dividends. And then you have $1 to your ordinary shareholder. Get it? Now, what about if the company have $100 profit? You still pay $10 to your bank. You still pay $1 to your preferred shareholder. And you have $89 left for your shareholder. Can you see the relationship? It looks like, in contrast to the debt holder, for our ordinary shareholder, high risk, high return. Am I right? High risk, because you are the last one that will get your money. High return, whatever left, go to your pocket. You have low profit, you have nothing. You have high profit, you take everything. Does this make sense for you? And that's how it works. Now let me ask you guys a question and think about it. If this is the case, bank, debt holder, equity shareholder, if we compare bank, the debt holder, and the shareholder, which one is more riskier? Or who should ask for higher return? Who should expecting or asking for higher return? Shareholder, right? And of course, high risk, high return. So this will be further discussed in week 4 and 5. But that's generally the logic about equity and debt capital. Because shareholder will generally expecting higher return based on our example, which means if you are the company, you should have known that shareholders' money is much more expensive than debt holders' money. Right? We talk about expensive means the cost of access to the finance. The cost of using shareholders' money will be higher than the cost of using debt holders' money from our example. Do you agree? But of course, this concept will be further discussed. Up to this stage, any questions? Very good. Now, let's move to the next slides. Financial intermediaries. What is financial intermediaries? In practice, we need an institution that's raising capital for us. That is, if you are a company and you need money, you can't just go to the market and ask the money by yourself. You need financial intermediaries to act on behalf of you. In short, investment bank. If you want to issue shares, go public, IPO, you ask investment bank to help you. For example, Facebook, they ask Goldman Sachs to help them to go public. The investment bank, they have more resources and with experience, and they will do roadshow, promote your company, and they will help you to market your company, and they will have a general idea about your company, and they will do the underwriting service, etc., etc. But you do need financial intermediaries to help you. Okay, so that's the function of financial intermediaries. They will help you by issuing liability, for example, bond, a debt item, or share, IPO. The financial intermediaries could be insurance companies, saving and loan institutions, commercial banks, investment banks, credit union, personal loan, personal fund, mutual fund. They're all financial intermediaries. Sometimes financial intermediaries themselves have money, a lot of money. Okay? A classical example could be superannuation fund or pension fund. In US, we call them pension fund. In Australia, superannuation fund. A superannuation fund, they have billions of money in their account. They can make investment decisions by themselves. They do have investment branch. Or they can serve as a role as financial intermediaries. And they may offer money to the company directly, serve as a function of the bank. Any questions? Pension fund and mutual fund, generally speaking, what is mutual fund? Mutual fund, the concept is very easy. Still give you a general idea. Mutual fund is like, today, if you see an investment opportunity, and this investment opportunity, you invest $100, will give you another $100 back. Very good investment opportunity, right? But you don't have $100. You don't have $100, and you don't want to borrow money. Then what should you do? You talk to your friends. Hey, how much money you have in your pocket? I have 10. How much money you have in your pocket? I have 10. How much money you have in your pocket? I have 10. 10 of you guys, mutually, you have a mutual fund. Okay? Very simple. You group the money together, then you make an investment decision. The money you have in your pocket is not enough, but you can ask for 10 friends to do it together, you have enough money. Mutual fund is very popular in practice for property investment, for example. All right? And that's how it works. Pension fund, superannuation fund, another story, as you all know. We contribute superannuation to superannuation fund company, Industry Super, Uni Super, Australian Super, etc., etc. And they collect superannuation fund from us, and then they have a lot of money, they can make investment decision. Up to this stage, any questions? Sometimes students used to ask me about hedge funds or other things. It's not involved in this unit. I can give you a general idea. Hedge fund is totally different. It's looking for risk, speculation, high risk, high return. All right? And the hedge fund is very hard for you to invest into hedge fund. Why? Because it requires a lot of money to get involved. So mutual fund, if you want to buy a mutual fund share, you probably need $100, $200, or $10,000, something like this. But if you want to invest into hedge fund or futures or swap, you need a lot of money. At least you need, for example, future contract. You need $65,000 US dollar for one future contract. So most of the case is not for individual. Okay, for each of the individual contract, you need $65,000. Hedge fund, for each of the individual piece of share, you need a lot of money. All right? And for property mutual fund, I can give you examples later on if you do have time in future lectures. But recently, the property mutual fund that I actually asked and consulting for, the project on Swanson Street, if you want to invest into this project, you need at least $500,000 per share. So if you want 10 shares, it's like 5 million. So that's how it works, okay? So it's not cheap. Up to this stage, any questions? All right, let's move to our next learning outcome, legal form of the company. I'm pretty sure that some of the students actually learned this legal form from other units as well. But let me give you a brief introduction, and let me tell you the focus of this unit, okay? Generally speaking, legal forms, there are 5 different legal forms in practice. The first one is called sole trader. We are not interested in sole trader. Sole trader, for example, a milk bar. Next one, partnership. Partnership, you and me, we work together. We form a company. This is called partnership. Partnership, unlimited liability. If I make a stupid mistake, I disappear, the debt holder can claim money from my partner. And that's the riskiness of the partnership. Limited partnership, which means we try to limit the liability. Okay? Partnership, generally speaking, in practice, happen on accounting firm, law. For example, Big Four accounting firm, they are partnership companies. They form in the form of partnership. For example, Big Four accounting firm, at the end of the day, if you join this company, you are willing or you want to become a partner of the company. That's how it works. But limited partnership. Okay? If something happened on you, the debt holder or your debt holder cannot claim money from PwC or KPMG. The liability limited on you. And that is called limited partnership. But those are not our interesting. Okay? These 3 forms of business, not our interesting. We are focusing on PTY Ltd and company. So proprietary limited companies and companies, or large listed companies. Generally speaking, we are focused on companies that have separate legal entities with all economic rights and responsibility of a person. So separate ownership and economic benefit. So how it works? Generally speaking, we are interested in company form. In company form, shareholder, they are the owners. And ownership belongs to shareholder, but management belongs to CEO. Owner of the company select the manager for the company to manage the company for them, to act on behalf of them. And that is called separate legal entity with all economic rights and responsibility of a person. Company itself, it is a legal person. Okay, so that's our focus. We are focused on these two types of company. Proprietary limited company, in practice, is named as PTY Ltd. So, just for your information, PTY Ltd is the first one. Large private companies. Australia is a bit different from other countries. In fact, in Australia, the large private company, they are really large. The value or market value of those large private company is even more than the public listed company. Those companies, they just don't want to go public because they just don't want to meet all the listing rules or requirements. But they are large companies. Okay, they may have total asset over $10 billion, but it's still a private company. Companies, easy. Public listed company. In Australia, represented by ASX 300. Okay, if you buy a newspaper, or financial review or whatever things, you open the newspaper, the share price of is ASX 300. Or you just simply open the website, yahoo.com.au, and you go to Yahoo Finance. And then Yahoo Finance, you have all the information about the listed companies. Any questions up to this stage? If there's no more questions, we will move to the last topic, which is the most important topic. And I do have examples and questions I want to ask you. All right. Last topic, very interesting. Something that is related to agency problem. This topic is about the corporate financial manager's goal. What should a financial manager maximize? In this unit, as I've mentioned, we only care about large companies, publicly listed companies. So we are talking about companies that do have shareholder and CEO, this kind of structure. Question, if you are the manager or CEO of the company, what should you maximize? In practice, there are three different kinds of propositions. The first group of researchers, they argue that the manager should always maximizing profit. This group of research is supported by accountant. From accounting's point of view, manager should always go for profit. Finance is different from accounting. I'll let you know later on why. Because if you study accounting before, of course, profit and loss, right? You go for profit. You try your best to maximizing profit. Is it right? Do you agree? If you are the manager of the company, should you maximizing the profit? Should you make your every decision based on profit maximization? Yes or no? Yes? Why? Why? Quick, why? You have to give me a reason. Come on. Think. Who said yes? No one said yes? If no one said yes, I'll assume all of you guys said no. And then I will ask you why. Yes or no? Why not?
Maybe at some point they will need to compromise on quality.
Very good. Very good argument. Sometimes they need to compromise the quality if they're trying to maximize profit. Exactly. Sometimes they may need to do some unethical things. For example, labor in developing countries. not sustainable development, right? Not social responsibility, no social responsibility. And that could be one example. Second, profit maximization, short-sighted. If you are the manager of the company, most likely as a CEO of the company, the average term for CEO of the company is 3 to 5 years. You may only care about your term of CEO, right? To represent the company. You try your best to maximize the profit during these 3 to 5 years. But what about after these 5 years' time? Does this make sense for you? If you try to maximize the profit, I can't say it's wrong, but it is arguable. Of course, profit maximization is kind of supported by accounting perspective. Okay? But think about it. I'll skip the second one, I'll come back later. Let's move to the third one. Third one, the third argument is supported by management, or from management's perspective. From management perspective, they are arguing that we should focus on stakeholder. What's stakeholder? Basically, a short example, stakeholders means everyone that associated with the company, everyone. Not only shareholder, but also suppliers, customer, debt holders, etc. Everyone that associated with the company. So from management perspective, they are arguing that, hey, we should maximize stakeholders' benefits. We should not only consider shareholders' benefits. We should also consider customers' benefits. We should also consider debt holders' benefit. We should also consider suppliers' benefit. We should consider everything. And that is the stakeholder argument. Do you agree? Do you agree? Are you happy with this argument? Well, hypothetically, yes. I'm happy with this argument as well. But is it realistic? Yes or no? Why? If you can do it, of course it is good, right? But this is really hard to achieve, isn't it? How? How can you make your shareholder happy, your customer happy, your supplier happy, your debt holder happy, everyone is happy? Is it possible? Now ask yourself, in your personal life, are you able to make everyone happy? How hard to make everyone happy? And that's how. So hypothetically, at the theory, this is a good theory, right? But in practice, it's just not that practical. So that is more from management perspective. But what about us? We are talking about finance. Listen, there's no right or wrong. As I keep talking about, accounting, they have their own arguments. Management, they have their own arguments. Just in the context of finance. In finance, we believe that we should maximize shareholders' benefits. As the manager of the company, you should only be responsible for your shareholder. Why? Because shareholder, they are the owner of the company. They are the one elect you or choose you as the agent to act on behalf of themselves. If this is the case, your job, your responsibility should always maximize shareholders' benefit. Does this make sense? And that's the modern standard theory. And that's, in finance, our argument. Do you agree? Do you think this is right? Well, that's the rule that we are currently following in finance. But of course, a lot of issues. I will give you an example, all right? But in finance, generally speaking, if you're talking about managers go in finance, we should try to maximize shareholders' benefits. That's the right answer. But apparently, encounter many issues as well. And let's discuss about it. How? How to maximize shareholder benefit? To maximize shareholders' benefit, as the manager of the company, you should try to perform the basic duties of corporate finance. You do external financing, you do reasonable capital budgeting, you do the optimal payout ratios, and then you ensure that you fulfill all the shareholders' duty and benefits. And that's basically the different arguments, right or wrongs. Now, before I move to the next interesting topic, a follow-on of this one, let me discuss something with you and share something with you. A lot of students get confused about accounting and finance. They always ask me, hey, Robert, what's the difference between accounting and finance? Well, I try to use a good example to let you know. As you may realize, in every university, accounting and finance, it looks like we study them together, right? Why? Accounting is more like information happening in the past. Accounting is more like you do a self-check. A report reflects your current health status. Information reflects your past information, right? And based on your past information, based on all this information, you make your decision. That's about accounting. Does this make sense for you? For example, income statement. For example, financial statement. For example, profit and loss statement. A statement summarizes what happened on the company in the past year. Am I right? Past information. And apparently, based on past information, we are able to gather a lot of useful information. We may be able to make a judgment about the ability of the manager. Am I right? For example, if I look at your results in the past trimesters, your result is all high distinction. At least up to this stage, I can make a prejudgment about these students. Highly likely this student is a good student. Am I right? And that's accounting information from the past. But what is finance? Finance, we are trying to make investment decision, something about future. We are trying to make estimations about future investment. Which is our best investment, this one or that one, about future investment. Does this make sense for you? So that is finance. Now, once you make financial decision, you make investment decision. So this is a process. At time zero, you look at the past information, you have a general idea about the company situation based on accounting information. Then you make investment decision by using your financial knowledge, right? And then you make investment decision about future. And then at the end of that year, you look back. You look back based on your accounting information, and then this accounting information will give you a better reflection about your investment decision. Am I right? And then you make your investment decision about next year again. And then you look back by using accounting information. That's how it works. And that is the relationship between accounting and finance. Does this make sense for you? Up to this stage, any questions? Good. All right. Now, let's do something very interesting and practical examples. Agency problem. During the break, there's one student asked me, "Hey, Robert, can you tell me the difference between agency problem and inside trading or something?" I told him that agency problem is more broader. Basically, what is agency problem? It's very easy. In the company, manager of the company act on behalf for the shareholder. Am I right? To this end, I am the manager. I should always consider the best interest of my shareholder. If I do not consider the best interest of my shareholder, this is called agency problem. Do you agree? Now, the classical example, I'll give you one classical example. Back to many, many years ago, probably 10 or 15 years ago, there is a senior manager from Hong Kong, okay, visiting my supervisor. And then they went to a restaurant. They went to a restaurant, Flower Zhuang, which is one of the most expensive restaurants in Melbourne. And the senior manager actually paid $500 tips to the waitress. And that's about probably 10 years ago, $500 tips. Clearly, in this case, the manager of the company do not act on behalf of the best interest of the shareholder. This is a classical example about agency problem. Am I right? But as you can see, and as you can imagine, highly likely this happened, right? If you are the manager or CEO of the company, you went overseas, you're probably going to use company money to pay for your bills, right? And that's agency problem. Another agency problem example could be sometimes, for example, inside trading. I'm the manager of the company. I have a little bit of information about the company because I make decisions. I have to make an announcement. So no one knows, general public, no one knows. I told this information to my best friend. And my friend buys share of a company. I hold the share for the following day, and then the share price increased and sell the share. Inside trading. Am I right? Manager do not act on behalf of the best interest of shareholder. Up to this stage, do you have a general idea of agency problem? Okay. The funny thing is, in practice, agency problems is much more complex than the example that I gave to you. Because those examples are too straightforward. And those examples, for instance, it is very easy to monitoring. It is very easy to overcome. You just need a better auditing system and other things, that's it. But in practice, there are a lot of cases or examples that is not that easy. I will show you one classical example, and you can think about it by yourself. A classical example. Please note that the agency problem may not just happen between manager and shareholder. In practice, right now, the agency problem may happen between shareholder and debt holder. And in fact, the agency problem may happen between debt holder and shareholder. And you may be wondering how? Easy. Sometimes debt holder and shareholder, they are the investors of the company, but they may have conflict of interest. I'll give you a very good example. You can think about it. Now this example, just for illustration purpose, I make extreme numbers, all right? Okay, let's see this example. Let me design it for you. Assume today we have two projects, Project A and Project B. For Project A, if you invest everything in your company, there's 90% probability that you will have 15% return. And there's 10% probability that you will have 5% return. So that's Project A, okay? Now let's go for Project B. Project B, there's 95% probability you will have nothing. You will lose everything. And there's 5% probability, very funny. Maybe not 5%, 5% is too low. Let me put 10% to make it. So let's see, 90% probability you have nothing, and 10% probability you have 200% return. Now, okay, let's assume everything be equal, nothing happened. This part of students, I want you to be the debt holder, bank. This part of the student, I want you to be the shareholder, okay? Now I am the CEO, I'm making investment decision for you. I'm standing here. For these two projects, which project that you want me to go for? A or B? Huh? Now let me ask debt holder first, A or B? Put up your hands, please. A? If you go for A, put up your hands, please. So majority of students want me to go for A. Shareholder, which project do you want me to go for? A or B? You lost everything means the company just bankruptcy, okay? A or B? Quick, shareholder, think. B? How do you guys think? If you want me to go for B, put up your hand, please. Only two of them. Okay, if you want me to go for A, put up your hand, please. So still, majority of students want me to go for A. Well, in practice, I think I will go for A if I'm the shareholder. Why? 15% of the return is good enough, and 90% probability. Of course, for debt holder, you want me to go for the safer one. Am I right? Okay, so if I'm the manager, if I want to act on behalf of the best interest of my debt holder, I should go for A. Of my shareholder, I should go for A. And as a reasonable manager, I should go for A. A. We're all happy, right? Let me change the scenario a little bit. What about if this company now is under going concern issue? Going concern issue, which means it's in major financial distress. Major financial distress. Okay? Major financial distress means the company may not have enough money and when it's going to go bankruptcy. Okay. I'll change the scenario a little bit. Now let me ask my debt holder, my bank. If this is the case, which project you want me to go for? A or B? You are the bank. Quick, quick. Which project you want me to go for, A or B? None of them? Okay, good. I'll keep your argument. I'll come back to you later. Anyone else? How do you think? Quick, quick, think. Doesn't matter. Think. B? You are the bank. You want me to go for B? All right, that's okay. Why you said no? Yeah. But what's wrong with project A? Oh, no. This will all happen before your bankruptcy. This will all happen. You will have enough time to get your money back, hypothetically. If you have to go for one, which one you go for? All right. You guys said B. Why? Wait. You are the bank. Hannah, if you are the bank, which means you are the debt holder, right? What do we learn before the break? If you are the bank, if the company went to bankruptcy, who will get the money back first? The bank, right? Then why you want to all in? Well, by your argument, you can choose to all in. I just want to figure out why you still want to all in, because you will get your money back first anyway. I can understand his argument. You better do nothing. You will still have something back, right? But why you still want to go all in? Okay, a very risky bank. How do you guys think? Are you go for B? Which one you will go for? Because A, it looks like the return is pretty good, right? Even the company is went to bankruptcy, the company will still get some money back. And I'm the bank. I'll get this money. You agree? Okay. Now, let's talk to our shareholder. There's something very difficult. How do you think? Which one that you will go for? Why? If you go for A, even if it's give you 15%, what happened? It's probably you have nothing left anyway. Well, this is unethical. This is not good, right? But anyway, let me ask you a very important question now. I will ask the bank's opinion. I will ask shareholders' opinion. Which project that you think I will go for as a manager? Because I'm the one who will make the decision anyway, right? Huh? Which project that you think I will go for? Or if you are the manager of the company, which project you will go for? Huh? Think about it. If I go for A, is it, or the company is in going concern issue? The company is in big financial distress. If I go for A, even the best case scenario have 15%, is it enough? Probably still not, right? If it's not enough, the company went to bankruptcy, what happened to me? Huh? Am I able to keep my job? No, right? If I am the manager or I'm the CEO that make a company bankruptcy, do you think I can find another job? Do you believe that I am able to find another job? Probably no, right? I'm probably going to lose everything. Then what should I do? I don't know. Maybe B. Worth for a try. I have nothing to lose. And clearly, what happened? This is agency problem. But in this case, it's very funny because in this case, possibly some shareholder may even support me. But apparently, it is clearly an agency problem for debt holder, right? Because you guys don't want me to do this. Does this make sense for you? So that's examples in practice. How do we generate conflict? But please note that what I did is so wrong. We can't do that. Okay? Rationally, in practice, if we have these two investments in front of us, we should always go for A because B is more like gambling. B is not doing business. If you want gambling, why not just go to Crown Casino, right? It's not business. But by doing this simple example, as you can see, that's what happened. Sometimes students may also want to ask me, hey, Robert, Do you have other examples about agency problem that is practical? Because your example looks really unpractical. Okay, easy. I'll give you another example about agency problem, which is very practical. That is, manager, CEO, sometimes they may have overconfidence issue. Overconfidence issue means they are overconfident about themselves. If you are overconfident about yourself, you may make stupid investment decision because you may overestimate the project, right? Now, people may ask me, hey, Robert, how do you know manager or people have overconfidence issue? We can do a very simple test. In 99% of the case, everyone have overconfidence issue. Do you believe in me? Let me do a simple test. How many of you guys have a driver license? Okay, good. Can you stand up? Can you stand up? If you have a driver license, please stand up. Because I want to ask you a very interesting question. A very interesting question, okay? All right, listen carefully. For those who have a driver license, I will ask you a very interesting question. If you believe your driving skill is above average, put up your hand, please. If you believe your driving skill is above average, put up your hand, please. Oh, I like you guys. Really? If you believe your driving skill is above average, put up your hands. Above average. Wow, that's out of my expectation. Because in most of the cases, when I do this example, most of the students will put up their hand. I don't know why you didn't put up your hand. I should probably do a questionnaire or something. In most of the cases, if you ask this question, you can do it with your friend, all right? If you have a bunch of friends together with you, can ask them. In most of the cases, more than 50% of the people will put up their hand. And that is a classical test of overconfidence issue. Because if you ask this question and more than 50% of people put up their hand, there must be wrong. Someone must be overconfident. Am I right? Because if you believe your driving skill above average, we should only have 50% of people above average. But if more than 50% of people put up their hand, there must be wrong. Or you can see down. It's out of my expectation because we have below 50%. Why you have so low confidence about your driving skill? I think my driving skill is like top 10%. But that's overconfidence issue. All right, it happened to everyone. It is really hard to overcome. Those kind of issues, agency problem, like this example here, we may have approaches or methods that we may dealing with, a better monitoring process or other things. But psychologically, like overconfidence issue or other issues, we can't dealing with. All right? But more and more examples I will give you later on. You can think about it. Now, if we have the agency problem, what should we do? How to overcome agency problem? We should overcome agency problem, rely on market focus, rely on incurring monitoring and bonding cost to supervise managers. And we need to structure our executive compensation package to align managers' benefit with shareholders' interest. The last one is easy. The last one, we'll try our best to align managers' interest with shareholders' interest. For example, today, if my salary compensation package, instead of money or fixed salary, is like shares, so 1,000 shares, I have full motivation to increase the share price because my salary is based on the share price as well. If this is the case, you will try your best to align the benefits of you and your company. And we probably need a better monitoring process to make sure managers behave ethically. And finally, we need a self-learning process as well. We need our manager to understand the importance of ethical investment and socially responsible investment. Okay. Now, ethics in corporate finance. After all these kind of unethical things, now let's move to ethics in corporate finance. I'll leave the best to the last. Why I leave the best to the last? Today, society in general and financial community in particular are developing and enforcing higher ethical standards. Ethical behavior is generally viewed as necessary and consistent with a company's achieving the goal of maximizing shareholders' benefit. Why ethical is so important? And what is the likely consequences of unethical behavior? I'll give you an example. I started to do my PhD thesis at 2008, about 10 years ago. So my PhD thesis is about socially responsible investment, okay? Ethical investment. Why ethical is so important? First of all, sustainability, socially responsible. It is very important for us to have sustainable investment. Because at the end of the day, our goal is trying to build a better society. We shouldn't try to maximize the profit in the expense of, for example, we have bad influence to the environment. And for example, in harms of others. Second, ethical investment, higher ethical standards will generally help, for example, my example before, will generally help the company to prevent that kind of investment happened. If the company have a higher ethical standard than manager, highly likely the manager will always go for the best rational project. In the highly unlikely events, they will not make stupid investment, they may not make stupid decisions. Thirdly, ethical standards. Higher ethical standards, in long run, it is good things for the company. Why? Because it protects the company like an insurance policy, or like to buy insurance for the company. I'll give you guys a classical example. Based on market research, we do realize that the investors, or customers, or society, we are kind of easy to forgive those companies with higher ethical standards. Think about it. Today, there are two companies that performs in the market. One company, both of them, they are in, for example, car industry, automobile industry. This one, let's see, assume you are Toyota, all right? Assume Toyota perform ethically and do everything that is good for the society, have a very good reputation for the company. Now, one day, Toyota decided to do a large factory recall. That happened before, right? They recall their car because of a defect, I don't know, something happened in their car, transmission or whatever things. If this kind of event happened, extraordinary event happened, what happened to the share price of Toyota? It is a bad experience, right? It is a bad event. The share price will certainly go down. However, if the society perceive Toyota as a good company, ethical company, with a very good brand name, the share price may just go down by a little magnitude, isn't it? Because at the end of the day, you recognize Toyota as a good company. You recognize this event highly likely because of a technical issue instead of management issue. Do you agree? So if you perform ethically, if you give the society an ethical view that your company always perform ethically, in long run, one of the benefits, it can help you to protect in these extraordinary events. Does this make sense for you? On the other hand, if you are another car dealer or car company or factory, XYZ, for example, you have a really bad reputation and bad names. And no one recognizes your brand names, and people just hate your company. Do you simply buy your car because it's cheap? What about if your company decides to do a large factory recall? What happens next? Apparently, your share price will decrease, right? And what happens next? Your share price may decrease by large magnitudes. Because investors or customers in the society, they won't forgive your company. They don't believe your company did this because of a technical issue. They think you did it intentionally. Am I right? They think this is because of bad management, or even you did these things intentionally. You just want to save cost. And that truly happened in practice. Am I right? People, generally speaking, if you think about it, people, generally speaking, they have high tolerance on American companies, European companies, and they have low tolerance on Chinese companies or Indonesian companies. And that's actually happening in practice, and because of this ethical behavior. Does this make sense for you? All right. I give you examples about ethicals, why it is important. I also give you examples about consequences of unethical behaviors, and I hope that you can put it in your mind. If in future, if you may stand in a position to make investment decision, you may always think about this ethical investment, ethical behavior. All right? Even today, if you think about Adidas, they launch like shoes every year. They are using the waste materials to produce shoes. And this is a really good behavior, ethical behavior. And to help them to rebuild their brand, because Nike and Adidas, they used to have really bad reputation because of the labor issues. They all sourcing to Africa, they all sourcing to Asia, et cetera, et cetera. But they now trying to rebuild their brand name. Up to this stage, any questions about the topic we've learned so far? Okay. Now, finally, just a warm up for the topics that we're going to learn in the next few weeks. Give you a general idea what is cash flow. I'll leave these slides in the last to continue on the topics that we talk about. Just let you guys know that I've talked about the difference between accounting and finance, right? In theory. Now, in practice, there is one big difference as well. That is, accounting normally focusing on accounting profit. Okay? Finance, we focus on cash flow. In finance, all our estimation is about cash flows. Because finance is all about investment decision, capital raising, right? You make investment decision, you can only use cash flow for investment. Accounting, they focus on profit. Part of the profit, if you learn accounting or study accounting before, you should have known, for example, account receivable, right? It's kind of like profit. Depreciation expense is kind of like an expense, but they are not cash flows. Am I right? Account receivables, they are not cash flows. Depreciation expense, it is not cash flow as well. So they are not our focus, they are not finance cash flows. You can't use account receivable to buy a project, to invest into a project. Do you agree? In finance, we only care about cash flow because cash flow, we raising capital, issue shares, we receive cash. Our borrow money, we receive cash. They are cash inflow. I invest into a project, cash outflow. Project generate cash flows, cash inflow. We're dealing with cash. Cash flows, 3 big components, which will be further discussed in week 8. But just give you a general idea. The first component called operating cash flow. Cash flow generated from operating the business. You invest into a project, you operate this project. This project generate cash flow for you. This is operating cash flow. Second one, capital spending. Initially, you have to invest into a project, spend on capitals, cash outflow, and net working capital, day-to-day cash flows. For example, stationery, for example, paper, for example, other costs. So those are the components of cash flow. And it is the cash flow that this unit we are caring about, we are talking about. All right? Now, an overview. Unit overview. What is this unit? This week, week 1, as other units, I'll give you a brief introduction about the scope of this unit and the scope of corporate finance. At the very beginning, we talked about the structure of this unit. I went through the unit guide with you and Cloud Deacon. If you forgot about how to use Cloud Deacon, please watch my echo recording video. I will post the echo recording video in the next few days on their week 1 study folder. Okay? I'll probably prepare a short summary video as well because we do have off-camera students. We need to prepare something for them as well. And then I went through Applia. Please note that Applia, it is free for everyone. Every students are able to access to Applia. You don't need to buy the textbook for Applia. Get it? Third, I talked about a textbook. It's entirely your option, your decision, whether you want to buy a textbook or not. If you want to buy a textbook, I'll provide you with textbook information. You can get it online with a discount code. With the discount code, the ebook version, it is very cheap. It's only about $60 something. Okay? I then went through the Applia registration process with you. How to sign up Applia. Please make sure that using your Deacon email address. I then go through the Applia document, assignment document with you as well. It is a homework, a very easy homework, multiple choice questions. And most importantly, you can try it for 3 times. And You have 2 weeks time to finish it. And you can even do it in a group. If you want to form a study group, that's entirely okay. And please realize that this 10 mark is basically free. I give it to you, as long as you're willing to do the practice. It's like a homework. And then we talked about assignment 2, group assignment, and it will be launched on week 4. Then we move to the lecture and give you a brief idea about this week's topic, about the general picture about this unit. What happened next? Next week, we will spend an entire week on time value of money. And next week's topic is very rich. There's a lot of slides, involves a lot of calculation. I fully understand students hate calculation, especially those students do not have any financial background. But look, you are dealing with money. You're dealing with finance. You have to know numbers, right? If you enrolled in an accounting and finance unit, you should expect that you have to deal with numbers. If you are not expecting to deal with numbers, you can't do accounting and finance. This doesn't make any sense. All right? I know it is hard. It won't be easy for next week, but let's go through them together. For time value of money for next week, it's basically about how do we consider the time value of money? How do we incorporate time value of money into our practice? Like the example that I had with you at the very beginning of the class. If today I borrow $10 with you, how much money should I give you at the end of the year? 11, 10, 9, 12? That's something we need to learn in the next week. Once we have the foundations about time value of money in topic 2, in topic 3 and topic 4, I will talk about valuation. How to value bond, a debt item, as an example. How to value share. What are the key determinants of share? Why share price is determined by dividends? Why it is determined by the risk? How do we capture risk? Why it is determined by growth rate? And then in week 5 and week 6, we will talk about the risk and return relationship. What is the relationship between risk and return? You guys may be wondering, hey Robert, it's easy. High risk, high return, low risk, low return. Yes, that is the general relationship. But to what extent? For every unit of risk, how much return that we should give it to you? How do we determine risk? In practice, how do we actually have a standardized number to represent the risk? What is the proxy for risk? Why? What is the proxy for return and why? After we have all this knowledge, the first and the second block, those are the foundations. I call them foundations. Once you have foundations, you're then able to build the building. We then move to topic 7, 8, and 9, how to make investment decision. In investment decision making, you need to consider risk and return. You need then employ the knowledge you learned from week 2 and week 5 and 6. Investment decision, different approaches, different skills about evaluating projects. If there's 2 projects in front of us, which one should I go for? I'll give you guys a classical example. You can think about it, okay? This is the first project. I invest $10. This project will give me, listen carefully, $15 in 1 year. That's it. This is my second project. I invest $10. This project will give me $1 in year 1, $2 in year 2, and then $20 in year 3. If you have these 2 projects, which one is better? Which one is better? You may see second one, because it looks like there's a large cash flow at year 3, right? Let me see my question again. Think about it. First project, I invest $10. This project will give me $15 at the end of year 1. That's it. Second project, I invest $10. This project will give me $1 at the end of year 1. $2 at the end of year 2. Now let it make it bigger. $30 at the end of year 3. A large lump sum at the end of year 3, right? Assume these 2 projects, they have the same risk. Which one should you go for? Even the risks are the same. The second one? The second one? Do you guys all agree? Do you guys all agree? It might be wrong. Let me go to the first one. Why? You can reinvest again could be a good reason. I need a better reason. Not time value of money. If you consider only time value of money, they have the same risk and huge lump sum for the second project, right? Think about, in practice, time is something very important. What happened to this first project? I know it have low return, but what happened? I am able to get my money back in 1 year. What happened to the second project? You only have $1 in year 1, $2 in year 2. You are only able to get all your money back in 3 years' time. I knew it's a huge amount of money, right? But what about you borrow money from the bank, and the maturity date is year 1? You can't wait till year 3, isn't it? Am I right? See this example, which means in practice, there's a lot of other factors we have to consider as well. This is a very simple method. It's called payback, but I will talk about it. But just give you a simple illustration about approaches we may learn from future units. Okay? And that will be covered in week 7 and week 8. And then in week 9, after all those methodologies, after everything, we then introduce the concept of cash flow, specifically, how do we estimate future cash flows? We keep talking about cash flow, but what are the key determinants of future cash flows? Finally, in week 10 and week 11, we talk about structure of the capital, raising capital. We all know that capitals come from share and debt, right? But if you are the CEO of the company, yes, you know that you can borrow money, you can issue share. But how much money should you borrow? What is the proportion? The company debt to the equity ratio, 30% debt, 70% equity, or 40% debt, 60% equity. How do we determine the structure of the capital? What is the optimal capital structure? And that's basically everything we're going to learn from this unit. And in week 11, we talk about dividends payout policy. Okay? Now, that's the general picture about this unit. All right, I hope by doing this lecture, you have a little bit interested about this unit. And before or after we finish this lecture, think about the question that I'm asking you. What are you expecting from the unit? All right? If you do have any questions, please ask me. Okay? All right. End of week 1 lecture. Please prepare chapter 3 for next week. And please make sure that you now know how to use Cloud Deacon. I will stay in this lecture theater for another 10 minutes for questions. If you still have more questions you want to ask me, come back to see me after class, okay? Now, you're free to go. That's the end of this week's lecture. I'll see you guys next week, all right? Yes, just give me a second. Yes. Do you log into FAR?
Yeah, I did like the sign thing.
If you create FAR, you just go to FAR. Oh, I should have mentioned that. And then FAR users sign in with FAR. Yeah. Or just before you leave, a student asked me something, just want to make sure that you know. So if you want to go to Applia, once you have your account, all you need to do is type applia.com. And then you sign in with Applia. And then you enter your email address, and you will get into Applia, okay? So once you sign up, you then go to this, this page to get access to Applia, okay? That's it. Yeah, that's it. That's all you need to do. Sure. That's okay. Take your time. I'll be here for another 10 minutes, so take your time. just give me. Yeah. So you what? So you're doing an MBA international? Yeah.
So what are your next steps? What are the
Look, my strategy, as long because if you are able to enroll in MBA international, you can work in full, which means you're highly disciplined, so you can work it out. Hard work is not an issue for you. So my suggestion, as long as you follow the unit, you should be okay. Yeah, you just follow what I ask you to do in this unit, you should be okay. You don't need any additional study or something.
and about the financial planning? Exactly.
Yeah, yes. Yes, yes.
So I do have an idea of the topic, like how that work in real life, but I don't have any knowledge about that. So that's why I decided to go for I want to work in management.
Yeah.
So yeah, I've already started working on this. I realized from just my financial information and ideas that I get finance. That was pretty okay for me. I just wanted to learn it. But everyone is from accounting and finance background, so that would be fine. Follow whatever.
Should be alright. I think you should be fine. If your background, you should be okay. Do you get your email? That's kind of weird. It shouldn't be that long. Probably click resend your email or something. If you don't do, you can go to the course as well. I think the verification you can do it. You just remember to do it. You just click go to the course. You just click go to course. Yeah, you can go to course. You can verify later and click continue. If you don't have Flash, you just view all assignments. Yeah, and you're just going down. It's not started yet, but that's your second one. Yeah, but it will be started on next week. Yeah, it will be started on. Yeah, that's due date. Yeah.
Oh, that's it. Yeah, after the class it will start.
Yeah. Yes. It will start next month. Yes.
I would like to know how long is the book? How many pages?
How long is the ebook?
The book that you.
The textbook?
Yeah.
How many pages?
Yes.
Like a few hundred pages? About that big?
Maybe 500 or 600?
Maybe 500. Yeah. What do you want?
I was just wondering.
Yeah. It's about 500 pages. Yes, I think. But you don't need to read all the chapters or something. Yeah. Because at the end of each week, I will let you know which chapter you should read. So can you see that? Read chapter 1 for this week, read chapter 3 for next week. So you don't need to read all chapters. But that book itself is about that big. It's about probably 600 pages, 500 pages.
Any alternate for this book?
No, you can buy ebook. Ebook is cheap. Yeah. If you want to look at the cheapest source, if you do want the book, and if you go for the cheapest choice, I think ebook. Because you mean the discount for an ebook is about $60 or something. But and you can resell the ebook as well because ebook I think will last for 2 years or 1 year.
Can you print the ebook?
Yeah, of course, you buy ebook, you can print it wherever you want. If you buy ebook, you can open it. Of course, you can print it.
Okay, it's done. With the verification as well. Thank you
Yeah,
so much.
no worries. Yeah, do it later. Did you sign up? I told you. I just told you. If you just go to Applia, just click it, and see, sign in is Applia. Sign in. Oh, this chair is open. Yeah, and you can do verification. Okay, you will send your email, you can do verification, but you can do it by yourself. You just go to course, click continue, and then you view all assignment. That's all the instructions in your assignment book. That's it. So it's not open yet. Next week it will open. Once it open, you can click it. That's it.
Thank you.
All right. Easy, right? Yes. Oh, you become are you from Mongshan's T1 or something? Did you send an email to Mongshan?
Yeah.
All right. So what time you make an appointment?
6:30.
3:30. All right. You just go. Yeah, you just go with me after class. You just go me. I'll probably be for there for another 4 minutes. You just follow me, okay? Yeah.
If you attend Monday class, do you need to attend the Thursday one?
It's up to you. If you want to attend class, you can attend either Monday or Thursday.
So just one of them.
Yeah, why you attend 2 of them?
I thought we have 2 lectures in 1 week.
No. It's 2. Yeah. Same lectures. Yeah. Same lectures. Yeah. You just need to attend 1. Yeah. Okay.
Thank you.
No worries. All right, let's go. Just a second. Just make sure it's done.
7个月长啊，然后在年龄25岁上，25岁好像
25岁以上，要不然你也就只能是40。你是因为25岁以上，所以